Hey, all right. Good morning, everybody. It is a Fed day. Everybody is expecting to see the rate hike. The consensus seems to be 50 points. That's what they had already made clear in their signaling. There has been a few whispers that the Fed may try to do shock and all, but I just really don't see that, right? They're not trying to play games. So they said 50. We expect 50. I've seen comments from people that said things like the fake out, right? So like when the Fed starts talking and you get that first burst of price action moving in one direction, and then a few minutes later it starts going in the other direction. That's not a deliberate fake out. The algos are reading the statement that was pre-delivered, and it goes through and looks for keywords, and then it responds. And then after that, as the Fed talks, regular people, the algos, are in there trading. So that's why you often see two different bits of price action during the whole Fed talk, right? The algos are responding to the statement that was put out. Keep your eye on the energy markets today. There's a lot going on over in Europe and Russia with this new ban. It's already having an effect on the markets. We don't know how much more it's going to affect us. It's just something you definitely want to keep your eye on a normal market in the last few years. Energy really hasn't been the dog, but certainly coming around now. While everybody is focused on the Fed today, they're not the only game in town. There is a lot of other econ anticipated or expected to be coming in today. Having said that, however, we don't expect much out of it. So that covers 5 things we need to know, which is a free publication, by the way. If you don't have a Bloomberg account, you don't need one. You can just go over there and sign up. They'll send you an email every morning. 5 things you need to know. Right now, we're looking at FX Street. This is another free place that you can go to every day in the morning. I like to go here because they often have some talk about the dollar. And if you haven't really heard me talk about the dollar before, the dollar is really impactful, the dollar index. So as it's moving around, we need to have some grasp of why it's moving. Sometimes it's good that it moves up. Sometimes it's bad that it moves up. We need that context behind it to kind of grasp, is this a good thing or a bad thing? Well, unless you have an economics degree and you're keeping track of the Forex markets and markets going on around the world, understanding what's going on in that dollar isn't always an easy thing to do. And it's not just something that comes from the candles, right? It's having that greater perspective. So you want to find places where you can get that perspective. FX Street offers a very brief summary of what they see going on in the dollar a lot of times. There are some days you'll come here and there won't be anything, but most of the time. Of course, they also do have the economic events for the day, but I don't use this very often. So another free place. Get a list of things. Just make sure you set your time to it so it accurately reflects what you're looking for. Here is Koifin. This used to be a 100% free place. Now it's a paid service, but you can be on the free side and still see what we need to see, which is the market news It'll check global markets. One of the things we need to do when we get up in the morning is find out what happened around the world. Were any of those markets affected by some sort of news that came out? Are they raising rates somewhere? Was there a market on holiday? What's going on? Right. So it's just a nice perspective, get a perspective of what may have happened. Sometimes we galvanize markets into a trend around the world. Sometimes they galvanize us, beginning the trend, and it echoes into our time frame. So we always just want to look and see if there's anything in there that stands out. One thing I like about checking these is it'll often tell you what sector was doing good in Asia and then what sector is still doing good this morning in Europe, because Europe's still open. And then it kind of give you a clue or an idea of what's going on and where the expectation is for the day, right? If they're hot in real estate and industrial production and building materials, or if it's going to be the airlines and just whatever, kind of helps point us in the right direction. Not always. We get what we can get when we can get it. All right, so the market watch for the day, what actually is on the agenda? We want to take the description and bring it over next to the time. It just makes things a little bit easier. Now, if yours is really cluttered and looks like this, an easy way to solve that problem is just turn everything off and then turn on the Econo Day event. Set the description next to the time. You got a really clear idea of what's going on. You can see there's a lot of things today, the 10, the 3, the 30. At 8:30 this morning, there's going to be announcements on those. You got the 80 ADP today, PMI, ISM. You got your 10:30 petroleum report, which is where we usually trade something like the USO. And then you've got the Fed this afternoon. So a very full morning. We'll be pausing for lunch and then the Fed in the afternoon. On a day like this, there's absolutely nothing wrong with just standing aside and not participating at all. Just going and doing something else, at least until the afternoon. Throughout the night last night, we basically did nothing. We got a little bit of a rally started here after the kill zone about 5 o'clock this morning, and it's not expected to get through yesterday's high. So it's kind of like it can continue to grind up all at once. But by the time it gets to yesterday's high, that's probably going to be all we get, right? It's going to be one of those days. We have no expectation that this market's going to really do anything until we get that announcement. So it'd be like the hamster on the wheel again, a whole lot of running around, and then we're right back where we started to begin with. So we want to game it out like we normally do, kind of asking that question. What's our expectations through the day? Theory one would be that we maintain between yesterday's high and our own Globex low. It's not an unrealistic assumption. It's a very tight range, kind of fits into what we expect for the day. Out of all three scenarios, I lean into this one more than any of the others. If we were to expand that range down a little bit more to encompass yesterday's entire trading day, not the Globex of yesterday necessarily, but just yesterday's high to yesterday's low, I'm a little more comfortable with that range. although it is a much bigger range. So you could think of it as range 1, Globex low to yesterday's high, uh, a more expanded range to encompass yesterday's RTH low to RTH high. And then if you even wanted a little bit more, then you could focus on all of yesterday for the range. Either way, as long as we're inside yesterday's price action, then we're still inside day, right? So if those are our range bound synopsis theory, then what are the other two? Well, the other two would be that we, for some reason, get aggressively bullish, break through yesterday's high, and challenge the 10-day point of control. We would also be focusing on our ADR, which happens to be 2.1, close to 2.2. On the day, we're up already nearly 0.5%. So if we were to focus on the 0.5%, we're already up, and then add the rest to give us our 2% ADR, that puts us at around 42.53. Morning, Jerome. So 42.53 is the 21-day ADR to the upside, and that would be on the normal end of things, right? We're not talking about we had an extreme day or we had extreme moves. This is just a nice positive day. Good bullish price action, 42.50 to the upside. What if things start to go negative? We had already talked about the low of yesterday being a part of the range. From our current location to yesterday's low is 1.45. Well, we're basically up 4.5. So that would be negative 1% at that point. So let's go ahead and just measure from there another 1%. 40.88 would be our downside after we broke out of yesterday's range, right? So we're talking about an inside day breakout for either end of that. So we definitely want to check the point of control. We want to go over and look at the volume profile. The 10-day point of control, 42.11. It's the same as it was yesterday. We're coming into some volume resistance. That volume resistance kind of lines up around 41.90 area. Be right around in here, and then of course the POC. So if we got all this resistance right around the 41.90, 41.80 area, and then it really starts to pick up at the roundy 4200. The thing is, though, the 4200 starts to get us a little close to the point of control, which happens to often cause a little bit of gravity. So if we get that close, we're very likely going to go to it. We're still not expecting that move, though, unless all the other econ that comes out this morning happens to be overwhelmingly positive with absolutely no gray area in there. Then we could see a move this morning up to that 10-day. But without that economic news coming in very strong, very clear and positive, I don't see how we're going to have an inside day breakout at all. We may wick outside the range, but I don't expect it to stick, right? Not until Powell talks. If we look at a 5-day, 5-minute chart, it's what we call our 5x5. You can see yesterday's point of control. It's an untouched point of control, so it's called a virgin point of control. And Monday's is another virgin point of control. So from the downside perspective, we have two different virgin point of controls. And should we interact with those, is very likely we're going to see a response out of price action. right? So it's good to have them on the chart to kind of know where they're at. Okay, so I know this is kind of a busy chart. There's a couple of things on here that's worth just taking a moment to focus on. This is the top of the range, and this is where we opened Monday. So basically where we closed Friday. This box is the upper end of the expected move for the week. Right? It's only half the box because the other half is down here. We're not really focused on that because we're in the upper area of it. So one thing we didn't mention is in the downward scenario, should we break below our own Globex low and begin moving to the downside, one line that is particularly important is going to be the close of Friday, 41.37. Open, high, low, close are really important, really impressive pivot points. They provide all kinds of price action opportunities. Just got to be able to recognize where they are. All right, so we want to add Friday's close to the scenario because we very likely could interact with it. Now you can see we went through it the other day and the price really didn't respond to it. Doesn't matter. We still want to market. We still want to recognize where that pivot is because if we come back down and make contact with it later on, we could actually respond off of it. You're heading towards a pivot point. You want to know where that pivot point is. If we don't respond and we move right through it, hey, so what? But at least you knew it was there and you didn't try to go short right before we hit one of them, right? Or long right before we come up into one. When they're on your chart, you can also see how the dome is stacking orders around that area, right? You can see the other participants. We can start looking for icebergs, start looking for traders defending that level through the order flow that's coming in, and then watch as if it's being defended when we come down into that level. So even if price doesn't respond there or not, having it there helps you validate the other flow that you're seeing on the dome and then through the time and sales as the trades are interacting around that level. It's worth noting or pointing out, look how compressed we are. So when we talk about things like initial balance is exactly like the open range, except with the open range, you can choose whatever you want. You can have a 30-minute, a 1 hour, a 5-minute. You choose whatever open range you like. When it comes to initial balance, you don't get to choose. It's a 1 hour time frame from the 6 o'clock open to the 7 o'clock hour. And you mark the highest and the lowest point within that Globex 1 hour time frame. That's initial balance. The theory is when initial balance is really narrow, that the work for the day has not yet been completed. And I would suggest that last night's initial balance is very narrow. It's a very compressed range. There's still a lot of work that has not been done. All right, so looking at the Nasdaq, it's even more compressed than the ES. Right now, we didn't even manage to hold the breakout from our earlier Globex high. All we ended up doing was setting a new high and then fading back off of it again. We still have yesterday's high to deal with if we do manage to get through our new Globex high. And you can see there's like this really solid area here at 13,150-ish for that top side. So a lot of resistance. If you take it back a little bit more, kind of cover the Globex between Monday and Tuesday, this range kind of tells a lot about what's going on. And it's also the catalyst. We're building up and winding up more and more and more and more energy the longer we stay sitting in this spot. Now, the really cool thing is we know that that's what a market does because of that fractal energy indicator. But we also learned that when a market actually does start to make that move, we can use that indicator to validate or confirm that it's moving with energy behind it rather than moving to gain energy, because that's how a market can also gain energy if it's not running sideways. So at least now we can gauge that, right? Kind of look at, is the move being done with burning energy or is it being done to gain energy? For this morning, I really don't think it's going to matter one way or the other since everything is going to be Fed related. Just keep in mind, as the econ comes out through the morning, we may end up with a day that looks very, very similar to yesterday. Now, I normally don't trade around the open, but the Nasdaq was just so violent yesterday that I was trading the open. And I used the micro since the Nasdaq is such a rangy little booger in the mornings. And even with a micro contract, just one little micro contract, in this small little time frame, high to low, low to high, high to low. I used an account with less than $1,000 in it, right? One of the little micro mini accounts, and grew that thing nearly $90 after commissions, trading in just that little tiny window right there. Very small amount of time. So it doesn't take much with those micros. When you've got 1 minute candles that are as big as 25 and 35 and 45 point ranges in 1 minute. Right? It's just absolutely massive moves. It's not expected to be any better this morning. This kind of trading, there's no edge in it. Is it tradable? Can we do it? Yeah, we can do it. There's just no edge in it, right? If you look at this is really great two-sided price action. There was algos in there trading with other algos. They were all just passing it back and forth, right? One firm is obviously building into a very large position, and another firm is building out or tearing down a very large position. And so the algos were just in there passing it back and forth, getting the work done. It's violent, it's choppy, it randomly turns around and goes the other direction. It's tradable. But if you're using a small account, then you're going to need small stops. And a small stop in this kind of environment is very likely just going to cause you to do nothing more than get stopped out over and over and over again. So if you're going to trade that way, use the flow tools, right? Something like Jigsaw or Bookmap or something like that. Use a small tick chart, right? A small time frame. And I continue to hear people tell me, "Oh, I trade the 5 minute because I was told not to go below the five." Well, somebody lied to you, right? There's nothing wrong with going to whatever time frame you want. There's just consequences for the choices you make, right? So a 5 minute Busby, for an example, has way more weight and way more validity and better follow through than a 1 minute Busby. But they're both tradable, right? There's nothing wrong with it. Jigsaw and Bookmap, for an example, their default chart settings are 10-second charts. Out of all the chart timeframes that those firms could have used, they used a 10-second chart. Obviously, I'm not telling you to go trade a 10-second chart, right? But there's not some taboo bad thing about using a smaller time frame. So trade the time frame that shows you what you're looking for. Even in a market right now that looks like this, if you're looking to trade trend, there was plenty of trend in here. You just aren't seeing it on a 5 minute chart, right? If you were to go to a 250 tick or to a 10-second chart, each one of these runs up and then the run back down. Each one of those were trending Very clean, responsive price action that you could have traded if that's what you're looking to trade. So get over that taboo, get past that bias that you have to stay on some particular chart time frame all the time, because you don't have to. For the Nasdaq, we want to game this out the same way we did with the S&P. We're very likely going to maintain inside yesterday's price action from yesterday's high to yesterday's low, and that would be our range bound market. If you want to add a zone to that, just like we did with the ES, then you could consider a tight zone between our own Globex low and yesterday's high. That would be like zone 1. And then the entirety of yesterday would be zone 2. From that, we can discuss, if we were to move to the upside, what would that look like? Well, we would first have to have an inside day breakout. Right now, we would also need to get through our own Globex high. So we have a little bit of resistance at that pivot minor. Yesterday's high would be another resistance area. And then beyond that, we would need to do something like look at the volume profile and see what's up there. But another tool that you can add is that Quadrant Lines. It's a nice little gift that Thinkorswim gave us. You can use Quadrant Lines to measure everything: range, head and shoulders, flags, cup and handles. It's a really useful, all around, valuable drawing tool. If we measure yesterday's range and we cut it into 2 pieces, then 50% of the range would put us at 13,300, and 100% of yesterday's range would put us at 13,400. That also lines up with these pivot points between Friday and Sunday, right near the Globex high of that and near Monday's high. So it's always nice to see when our lines and our analysis fit previous areas of price concern. So at least this way we have our top side marks, but now we still have to be able to answer the question, are they even in reach? Right? Because we don't want to draw a bunch of lines and focus on something when price has no chance in hell of actually getting there. What's our current ADR? It's 3%. Where are we right now? We're up on the day 0.3. So we can just, from our current location, start asking that question. Is 0.5% of yesterday's range in reach? Yeah, that's 1.2 away. We add the 0.3, it's 1.5% from our open, not from our current location. So that's doable. That's only half of our ADR. We can easily make that move. Take 100% of yesterday. That would give us 2%. Add the 3 that we've already got, that 0.3. Now we're up to 2 3/10. That's still less than the 3%. So we can do that too. Right? Again, it's not overreaching. We're not asking too much. That's within what we would consider a normal day at this point. So game it out to the downside. From our current location, if we were to just go down to yesterday's low, that's 1.23. Well, basically we'd be at a -1 at that point, a little more than that, but keep things simple. That'd be at like a -1. But that still says we could go 2% more beyond that level. So let's just go ahead and run that down to, I'm going to set it at 3.3, because we would first want to give back our 3%, and then we would want to add or subtract the full 3%, right? So the 3/10 and then the 3%. It's around there somewhere, isn't it? There it is. So if we were to make our 21-day ADR to the downside, it would put us all the way down to 12.7. So we would be outside of that near-term low from Monday. Let's just kind of go a little bit bigger and see, is that the low? Yep, that is the low. Okay, so when you kind of back it out that far, you can see that if we do make our ADR to the downside today, we're looking at a move beyond that near-term low, right? And the next question to kind of ask with that is, would we have at that point gone too far? Well, remember, we have the measured moves. We have the weekly expected move. So we can go over to the weekly expected move and see what was the expectation for this week. Well, the high was 13.3 and the low was 12.4. So if this was the range for the whole week and we end up today below 12.7, yeah, it would be a rough move to the downside, but we're still within our expectations for how far we could have moved or should have moved in a week. This would not be considered extreme. This would not be considered a crash or in any way imply that the game is up and that we should just sell everything and run this into the dirt. Everything out there has an expected move, and we can quantify that expected move on a day-to-day basis, a week-to-week basis, month-to-month, year-to-year. We can really use whatever metrics we want. It's a formula, right? It uses the square root of time, and you choose how much time the formula is using. We are underneath the 10, and here's a little bit of a danger, right? We're really close to that 10. Well, if the 10 is the midpoint or if 10 is the gravity point, and we often measure how far away from the 10 we happen to get before we see a reversal or a pause, or when we say the market has moved too far, that metric comes from actually gauging that distance away from the 10. And when it gets around 4% or 5%, then we say, yep, that's very likely a reversal zone. We've gone about as far and as fast as we can go. And if we go any more than this, we're going to be outside the norms. Well, if we're talking about a move to the downside today, and we are very close to touching that 10, then we could see a 5-6% move to the downside. And that wouldn't even be considered extreme. And it wouldn't owe us any form of a reversal until we got at least that far. So the downside weekly expected move is sitting at 12.4.5. And if we measure that from the high of our own Globex today, that'd be a 5 3/10 move to the downside. We can do that. It's a little beyond our ADR, but it's absolutely within reach, and it still wouldn't be considered extreme, right? So always kind of keep that in mind that it may feel extreme, it may look extreme, and depending on the speed that we move, it can reverberate through the rest of the marketplace. Because a 3% move made in 2 minutes is different than a 3% move made through the entire day, right? They would feel very different. And feelings matter in a situation like this. If we highly correlate and we have 99 out of 100 stocks in the S&P 100 or in the Nasdaq 100, if 99 out of 100 are all going to the downside, and you start to get gold and Bitcoin and oil and bonds, and there's literally nothing moving to the upside except the VIX, then the move can get very extreme very fast. There's the old saying that it's easy to buy because you can always find a seller. But if everything starts to go really bad, like the other day, it's really hard to find a buyer. And the buyers get smart and they keep moving their orders lower and lower, making those sellers reach farther and farther down that dome to get a fill. And it's very hard to find a buyer when things start to go to hell. And that's often why price, quote, jumps out the window and takes the stairs up, right? So that about covers it with the S&P and the Nasdaq. I think I beat that horse about as much as we're going to beat it. Let's take a look at what's going on in the other indexes. Bitcoin woke up last night. Like, no kidding. Someone slapped it on the and away it went. So maybe it's going to calm down a little bit. We're starting to get a bit of a topping pattern, like a really nice bull pennant or a bull flag. The thing is about a pennant or a flag like this, um, I've always got this expectation that says if we're trending and a flag is a continuation pattern, why are we not continuing yet? Where the hell is everybody? If everybody's so happy and excited and is bullish, and where's my continuation? And it's not continuing. So, from one point of view, this is a nice little topping pattern, some collection of consolidation, and we have not yet continued the move. The longer we stay sideways, the wider this consolidation lasts, the more likely it is that it's not going to be a continuation after all, and it will uh, turn into a reversal. We've got this really squished, kind of broken head and shoulders on gold. It's worth noting that we're inside yesterday's range in gold, by the way. Same thing with bonds. Bonds set that midday range and never came back to it, just sold off and off and off. Now, we did get a pretty significant move around the kill zone between 2 and 4. So we had that really deep tweezer bottom. If you look at this kind of from the perspective of like, what were the algos doing? It really seems like they dumped a position or they dumped to get liquidity. This is often referred to as a raid, right? So they call it the draw. They bring everybody in, they run a really tight price, draw them in, draw them in, draw them in, and then raid that liquidity before making the move. The sucker's bet. Still, that's what it's called. That tweezer bottom. It's a raid. They raided the liquidity, but it topped out, just like the bonds, or just like Bitcoin. Just been very equal, very wide candles, topped out. See these bonds not really move around today. It's kind of the idea, right? We don't want to see these things wake up and get to rock and roll, and definitely don't want to see them doing what Bitcoin did. We don't want any of these on the bottom to make any kind of big moves, right? We're talking about the dollar, the bonds, gold, Bitcoin. And Bitcoin just woke up again. So it finally looks to begin continuing that move. We'll see if it sticks or if that becomes the draw and the raid, just like we were talking about over here, right? Is it raiding liquidity before making the move to the downside, or is it now finally resuming? Uh, this chart here is oil, and as you can see, oil made a pretty significant move. I know it may not seem like much, right? But oil is a big contract. It's a big contract. And that is a very large move in that big contract. It's not done yet. We're not seeing any indication of a topping pattern. This is expected to continue. We're still looking for more information on this 6-month drawback and sanction of the Russian oil with the EU. So we don't have all the information yet. It's still in progress. It's still unfolding. So kind of just be aware of that. One thing that really concerns me is this very tight VIX. The VIX has not been accurate or useful or timely. The dollar has been much more valuable as a global risk perspective than the VIX. But if things go wonky today, I think you're going to see that VIX wake up. So at this point, we've looked at the futures. We've got a really good idea what to be looking for because those don't change on a day-to-day basis. But what I wanted to do is kind of prepare you guys for this afternoon with the expectations, right? You really want to kind of think it through and game it out. What is our expectation after Powell gets done? Well, you can go back and look at what we had earlier in the year, right? So Wednesday, the 16th of March, that was the last time the Fed had an announcement. So mark that on your chart. And this is why journaling your trades is so helpful. Mark that on your chart. Go back and take a look at it. What kind of trading did you have that day? How did the afternoon go? Where did you struggle after that report? Did you get caught in that fake out breakout, that first dump to the downside, and then the roly poly over to the other end, right? So when I marked this line, I was on a daily chart, so it puts the line in the middle of the day. But we know Powell comes out at 2 and then starts or releases the statement at 2 and then starts talking at 2:30. There's the statement release. The algos read that statement and trade it. So this isn't like somebody trying to fake you out. They're not playing games. They're not trying to catch you or trap you or anything like that. The algos read the report, only looking for keywords. And when those keywords are triggered, the algo does whatever it's supposed to do, right? So it trades into that basket of stocks. It dumped it down. But then he comes out and starts chipping his teeth. At that point, whatever he says, the market's playing off of those words. And it happened to be a rally to the upside and it stuck. It continued. You can see from that day, it was a nonstop rally up. That's kind of what I wanted to talk to you guys about, right? We should have an opportunity on the other side of this for at least 1 week where price uh, maybe drift isn't the best word. I don't have a better one yet, but where price is coasting off of that announcement. Now, it's not a forever thing. You can see it did get exhausted. It finally did reach a peak and give us some topping patterns, and it all ended, right? And I'm not saying that today's going to be bullish either. I'm saying that after today, you're very likely going to get at least 1 week of a consistent, persistent direction. If it's negative going into the close, it's very likely going to stay negative for at least a week, right? Same thing if it's positive. If it's positive going into the close, it's very likely going to stick for the rest of the week. And for a week, a good 5 to 10 days, market weeks. So give some real consideration into what trades you may want to take, especially in them big things, right? Things that can really move with a very nice beta to them. Amazon, Tesla, Google, those things that can get up and go, right? But I mean, even Apple had one heck of a rally up after that last announcement. Consider some of the names that have been beaten down the most if you're looking for those upside moves. Hey, I'm not a fan of, Facebook and Spotify and PayPal, but those are the ones that have been really beaten down. If we do get that rally to the upside going into the close today, those names that have been beaten down the most, they would be the ones that I would like to focus on because we're just talking about a short duration trade, right? 2 or 3 weeks, maybe a month for the options that we're choosing. We're not going to hold them that long, but and then that's the upside. So what about the downside? What if it's negative today instead of positive like the last one was? Then the ones that have not yet made the fall, they're going to be the ones that I would want to focus on. Apple, Microsoft, right? The names that are still holding near those higher levels. They're not at their highs, right? But they're in that upper zone, their upper ranges. So really give some consideration to this, right? Um, you have all day. It's going to be a very choppy, nasty, difficult trading day. Rather than trying to struggle with it, you could be thinking ahead into this afternoon and go in and look at a couple of these bigger name stocks and start asking that question: which one or two or three, which one of these do I want to play? And where are we headed with them? If it does get negative, where are we going? How far is it going to go? And game those out. It's a good use of time rather than waiting until the afternoon and then he says something and then it starts to move and then it's, oh, gee, gosh, maybe I should try to trade some of this. Really? It's a bit late to try to think about that at this point. All right. What do we got for this morning? Natural gas, Bitcoin, we got USO, XOP, and energy. All of those top names, except for the Bitcoin, are all energy related in some way, shape, or form. Then we've got you can skip, the FAS and the next one in line. Also, again, another energy one, right? So out of all of the top names this morning, they're almost all energy. And we start getting into a little bit of biotech, semiconductors, uh, small caps, which is really good to see moving around this morning. So a nice focus there. And then the bonds and the XLF. Uh, This has been my go-to for at least the last week or week and a half. Been really watching uh, KRE and XLF. Those two bank, one is the bank regional banking ETF, and the other one's just finance ETF. These have been real insightful on what's going on in the S&P, right? I see the S&P moving around and start asking questions like, where do you think this thing is going? Well, let's go look at the financials. You see that bifurcation yesterday between the Nasdaq and the S&P, where one was just completely different than the other one, which was a little bit of, I found, to be a good thing. We've been so tightly correlated that we finally broke that correlation and they decoupled a little bit. I thought it was refreshing. It was nice. But why did it happen? Well, the Nasdaq 100 doesn't have financials in it, right? So from that point of view, when we start to see those financials rocking and rolling, they're not impacting the Nasdaq. They're definitely impacting the S&P, and it got that boost off of those financials. So when I seen that breakout starting to happen yesterday in the S&P, and I was trying to validate, is this a real breakout? Is it really going to stick? Should I jump in there and maybe get a bite of the apple? Seeing the moves in the financials really helped confirm that. And there's no 100%, right? It's not like something shook my hand and said, yeah, dude, you should totally get it. Bet, go. But it was just one more piece, right? It's just kind of adding to that confluence. Say, we want high probability trades. Well, I have more conviction in a high probability trade when I have more information, like the fact that this move was backed up in the financials. And when the financials started to fade in their flow, so did this fade in its flow. So continue to keep your eye on the sectors. They provide a lot of value and input. Again, it's very unlikely that we're going to get any sort of move today until the Fed. And through the morning, there's definitely going to be an opportunity, though. But it's likely to be a choppy, muted thing. So that's a good question. Someone asked, why do I keep referring to the kill zone and what the hell is it? So I didn't name it. I would have probably come up with some nerdy name for it if I had named it. But what I was doing at one point, I was studying seasonality, and there's this historical seasonality that says the biggest move in a 22-hour trading period is where. And I used to think it was the open or maybe the close. Because if you look at a trading day, that's usually where we are the most violent, right? And so, where's the biggest move in the 22-hour day? Statistically happen more than any other place in the day. Well, it turns out it wasn't the open or the close. It turns out that it happens between 2 in the morning and 4 in the morning. So, in a 22-hour day, statistically and historically speaking, the biggest moves in the market happen during this time frame. That's absolutely amazing. I didn't know. Right? I kind of came across that when I was running my seasonality research. And I had found articles and a couple books at the library that talked about it, and they referred to it as the kill zone. And I found it easy to remember that it was called the kill zone, and I just adopted that language. Um, just like between 6 and 7 is called the eclipse. I don't. It used to be a dead spot time wise, where like back in the day, you got to think how simple we share data now compared to how hard it was to share data back in the day. And that was like a dead zone where people just couldn't really get accurate and valid information until way later. So it was like being in a solar eclipse, where you can't see the light. Hey, I don't come up with this stuff, I just learn it, share it. So that's the eclipse, and the kill zone is between 2 and 4. So if you were to go looking around, check seasonality reports, kind of ask that question statistically. Where is the biggest move in a 22-hour trading period? Where does that happen? Right there between 2 and 4. It is time to get a new liquidity list. I'm not going to do that during this stream because, I mean, this stream has been long enough at this point. But this is the March liquidity list. We're in May, so we need to look back and get last month's. Every month, I like to go in and get that new list. I've done videos on this, so you don't have to wait for me, or you can just wait until I post the new updated list in the chat. You can see when we look back and run a search that I've posted the old ones. You don't need the old ones. You don't want the old ones because we're getting ready to update to the new one, right? But looking in the chat, that's where I post it. If you go to the pinned messages and you start to scroll back, you'll find where I have a video that discusses how to do it, how to go over to the CBOE and get the most heavily traded list. And that's all we're doing, right? We're looking at the list. I don't see the video in there. I'll have to hunt it down and make sure it gets put in there. It is in this channel. I just need to find out what I labeled it as when I posted it. But either way, it's really simple. You go to the CBOE, you ask it, hey, what was the greatest amount of options products that were traded last month? Or just, hey, what was traded last month? And it'll give you the whole list. Every company that had options that were traded last month will be on the list. And then you just sort them by the highest trade volume. And you can have the top 50 names, top 100 names, whatever. And most of the time, it doesn't change very much, right? Apple's always on there. S&P, whether it's SPY, SPX, those are always on there. So you got your go-tos. They're never going to leave the list. But then there's often something new come in, right? Like maybe it's a energy market, or maybe one of the EV markets. So you never quite know what was heavily traded last month. And I update my list every month. I'm just looking for the liquidity. What are they focusing on? How heavily are they hitting it? And then every month, I usually wait 2 or 3 days like we did here, right? It's May 4. We're far enough into the new month that it's now time to go get last month's list. You can also do that list every week. You can ask the CBOE, hey, what was the most heavily traded stuff last week? And you can update your list each week if you wanted to. I I don't want to, but you can. So be watching for that today. I'm going to put the list into the channel, the updated list. That's what I got for you guys. With that list, by the way, we use it for scanners. That way, we're not trying to scan, like all 600 optionable stuff. Anything that happens to have weeklies on it, we'll go in and specifically target that list that we got from the CBOE. And I keep my list less than 100. That way I don't overwhelm Thinkorswim and get a bunch of errors in my watch list columns. That's annoying as hell, right? Get a bunch of errors in there because you happen to have too many names and then you can't. It's frustrating. Everybody, be careful, be safe. I will be streaming in the large caps today, and I will see you all there.